Good morning, everyone. Trust we all are doing good. Welcome to my day 28 video of the 100 Days of Technical Analysis Challenge. And today I'll be looking at USD CAD. Just from the daily structure, to be precise, from the daily structure, you get to see a lot of things happening on the chart right now. So let's dive right into it. So, um, From the daily structure, actually, we can see we had this massive momentum of bullish candle to the upside. Then we had this structure created right here, and let me mark this out. And all of a sudden, we broke this structure, came back for a retest with the week, and we moved sideways for a while. Then we dumped further. So, creating another structure while we moved sideways for a while. We dumped further. Came back for a little weak retest, missed by a few pips actually, and we dumped further again, creating this last structure right here. And we're just moving sideways. We're just moving sideways. So that's just like the whole thing I see on USD card. So my bias actually on USD card will be to go short. Why? Structure is bearish. Trading off structure, just based off structure alone, structure is bearish. And also, if I try to mark out a trend, let's say I pick a trend line from this point, then pull it down into price right here, I know most persons would say, wow, it broke the trend line, it's time to buy. Stop being predictive, actually start being reactive, because of, if you actually conserved enough, you understand that this never moved above this previous structure above here. So I can't say the short term structure has changed. It hasn't changed, so we are still in a bearish market. It's until it actually moves above this higher structure right here, this last structure created. I can actually say structure has changed actually, and we can see we have equal lows around here, just equal lows everywhere, equal lows. Yes, right. Yeah. So we are still in a bearish environment, still creating some sort of a black flag pattern and all, but I look to go short on USD CAD. So looking closely at this current price or structure of price, we have a head and shoulder pattern if you do look closely. Now there's something actually interesting about this pair, and you will get to find out soon. We have this head and shoulders pattern right here. Okay, right, yeah. So we have this head and shoulders pattern right here, which is currently forming. So we look to go short on USD card, like short back to this level, just short back to this level, like back to this last level it broke. I do know it should actually fall further or deep further due to DXY actually, because I did the price projection on that personally, and I still see DXY falling to the downside. So USD is weak. I'll be looking to go short on USD card, and even technical analysis does align properly with the short bias. So short back to this level, then just possibly from this point, short back to this level. Then if I do see how price reacts at that level, maybe I'll be looking to go for another short right here. But just trading off structure alone, I should take profit. If I am to go short or my trading criteria is met, I'll go short down to this level. Now, knowing that we already have this type of structure here, right here. Now, I will zoom in to actually explain something to understand the concept of why I believe this is not a breakout of this trend line or this bearish trend line. Now, if we look closely, price moved sideways, just sideways, and you believe it just broke this trend line. No, it didn't. And also, if you look at this area here, we have wicks all around. So wicks equal to rejection, like rejection and price. So they didn't agree on higher prices. We had wicks and we had this indecision candle close, and all of a sudden we have this bearish candle. So if this candle does close with much bearish momentum right here, we would have an evening star pattern forming just right around here. So that's even more of a confluence to go short on USD card. Now, okay, resetting my chart, just zooming in better. Now going to the 4 hour time frame actually. The 4 hour time frame, okay, I can take this head and shoulder out. We already know we have a significant head and shoulder there. Now on the 4 hour time frame, the interesting thing about the 4 hour time frame is most people saw this inverted head and shoulder, right? And they took longs when it broke this last level here. And to be candid, that was just a manipulation, like an induction to get the dump money to buy using smart money concepts. It was just an induction to get the dump money to buy, whereas all we wanted was just to take liquidity and just drip back down further. So looking closely, this will just form a M formation and come back for a retest at this structure here before price projects down further. So if you bought due to the inverted head and shoulder, all is well. So I'll be looking to go short actually on USD card because of this formation. This is just a corrective nature in price. Like this is just a whole corrective nature in price. So we can see how well this corrective nature or the corrective pattern formed actually broke, and just look to major in to the downside, like to the downside, deeper down to the 1.335 level. Now to the 1 hour time frame actually. We can see how well this did happen. We had the breakout and a minor retest, then we had this major retest, and price is dipping back down like real quick. So um my bias on USD card is to go short on it. So if you do have any bias like against or in alignment to mine, please do drop it in the comments down below, and please do like and follow. Thank